Morning. I'm waiting for the email to come through. There's the email. There it is. Boom. Now I'm live and I'll turn on Do Not Disturb. And I'll go over here to bum 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 bum. Boom shakalaka. Moderation helps everybody close. Okay. Morning, Joe. I saw you went fishing. I have a feeling, Joe, you're fishing almost every day, though. Let's go small. We'll go small head. Morning, Nevin. Boy, I hope everybody listened to the weekend podcast. God, I don't. Let's see. Let's go to Weeble. Because I don't know. My account. Verify. Okay. I mean, here, you can see $2,300 I go into all of this stuff. But let's see. Market. I mean, this is Weeble, and I love Weeble. Friday, Saturday, and Sunday. My football days are Thursday, Monday, and Sunday. Boy, there's some. I mean, it's just flat, man. But QCLN. Sweet. Technology is amazing. I mean, think about it. 5-6 years ago, you might not have been able to have a streaming YouTube on the boat without really good signal. Look at this. I mean, I went over everything this weekend, but Tesla's got some weeks. This is what kills me. I got to take this out of. I'm going to redo the. Okay, let me go to Seeking Alpha. QCLN. Let's look at some of this. I mean, here's the Wednesday, September analysis. The Inflation Reducing Act has sparked. IRA has transformed the status quo. You'd think that this would be getting a huge, again, the markets are just kind of crazy. Joe, man, if I come out there, my ass wants some fresh sushi. So I had a friend make me fresh sushi. She's from Japan, and okay, if you're listening, okay, best sushi ever. The rice was amazing, and I never knew this. I never knew that good sushi rice has sugar. But I'm a fan of fresh salmon, wild-caught salmon. Let's go to charting on QCLN. I mean, look at that. 1 year. I mean, come on. 3 year, 5 year. 5 year, you're killing it. And I am killing it 5 year. But you go to 10 year, it ain't killing it. Let's do some scans before we get too late. Before we get too late in the day. Scans. Let's look at my brokerage holdings. Nothing. I mean, Friday was a good day until the last, half hour. Let's look at SPY. Hold on. Let me just refresh my memory. And if you didn't tune in, all of these, that's all outlined. I'm going to remove all this stuff. Remove all annotations. Yes. Let's go to a 5-minute on SPY. Yeah. Here. This was Friday. This is Friday, September 22nd. That is, look at Friday. It was up. Then about noontime, you just took a dump. And then, you got, again, lower highs. So you don't have confirmation. Now, this gap is only, the morning. So September 21st when we gap down. Just horrible. Horrible. Core portfolio, nothing in the core. Covered calls. Let's see. Nothing in the covered calls. In fact, I want to look at SPY. SPY on the 5-man. Look at that. Let me run strategy tester. Oh, got it. For anybody that wonders, I don't have a mouse. I have a trackpad. Boy, look at this. I don't know. Let me look. I'm going to try and see. I think I've gotten... SPY, remember, is the one that I suggested buying. I think I bought it in, I want to say May, June, somewhere around there. I haven't trimmed it. Should have, but I haven't. Let's see. We're going to go into... I have it in my HSA because it's making money for me. Let's see. So I have made 2% on it. In dividends, I have lost 4%. So I have lost money on this. Let's see. All positions. Let's see what SPY says. Total gain loss $400. So 4%. Oof. Okay. Back to the scanner. I get too distracted. Covered call ETFs, energy names. Oil's on the rise. Anybody that was watching, boy, that is. Let me see. Oh, close. No. This damn thing. I hate this thing. Let me see. Hold on. Does Seeking Alpha have a heat map? Home. They usually have some pretty good stuff. Heat map. Oh. I guess not. Invest in groups. This is kind of cool. Maybe I'll start my own freaking group on Seeking Alpha. REIT income. Huh. $41 a month. And finding alpha with investing groups. Home. Okay, there's the dogs. There's the dogs. Market data. I like this. I mean, here's the thing. You can look at U.S. equities or equity sectors. Technology was up on Friday. Energy. Is this real time? I don't even know. Consumer discretionary led by Tesla was down. Let's Reese and share map. No. How do you get a good, solid, see? I don't know. We're going to go home. Then we're going to go back here. Is that? No, that's the same damn thing. Let's do this. Same damn thing. So it's not. There we go. Copy, I guess. We're going to put this in. I'm just putting the heat map in. I mean, that's the annoying part, is that's all that takes to get a heat map. Okay, let's see. Oh, come on. Boom, boom. Copy image. Yeah, Scott, I got your note. I mean, listen, I like AMD. Here's what you have to look at. I'll look at AMD specifically. So this is the 4-hour on AMD. You can see kind of the death cross happening here September 7th. You haven't seen a whole lot. You are oversold at 30. If we go to a long term and I go to a weekly chart, you're kind of seeing that 50-day really use that 200-day as a resistance level right now. You're not as oversold as on the daily or on the 4-hour. You're only at 44 on the RSI. Your MACD is still above the oscillator line. It could go below it. You could see a slide like this. If we look at a long term of this and we kind of just do a, remember, on any chart, you want to hit 3 points. So if we assume that 2016 here, and then that is not COVID, that is October 2022, which was the lows. Let me redo this. So we take this, we anchor this down there, and we hit 2 spots there. and we assume that we hit 3 spots. 1, 2, 3. It's about 4, maybe 3. And you push that, then we should be close to some type of, bottoming. Let's zoom in on that just to see. Did I draw it right? Yeah. I mean, this one, done. Let's remove it. Remove this annotation. We're going to take this, anchor it there, and move that kind of there. So see, 95, you might be using 90 as the bottom on AMD. Now Disney, I'd kind of warn you a little bit. I don't think I'd touch Disney, just shocker, but I don't think I'd touch Disney until their next earnings. We're going to remove that. But Disney, let me see. Disney, it is in the core portfolio. You can see you're in a descending wedge. I mean, ever since September, when you were at September 2021, I mean, that was the high. Ironically, you saw this huge bounce from 91 to 120 in August of last year, July and August. You've seen huge bounces in this, but right now you just don't have support. I mean, think about it. This stock is trading at a level, was it 2014? So I do think that you have an opportunity here. Their debt's the issue. Cleveland Cliffs was just down like 1%. Something happened with Cleveland Cliffs. Today's the 25th, so I don't see news on it. Let's see. Let's look at news. Tools will say past hour. No, nothing. Nothing. But something just happened to it. Let me finish these scans. I got your notes, Scott. I got it as thinking at these levels might be a good dollar cost average on Disney and AMD. Just don't go crazy. I can't say I disagree with. I mean, it's the same as Target stock. I'm gonna put that in. Scans. So I haven't gotten a scan yet. Energy sector. Nothing. Levered ETFs. Nothing. Low cost Vanguard. Nothing. Spider sectors. Nothing. Wow. Not owned. There's always something in my not owned list. Thermo Fisher, which has been a dog. Baba. American Eagle on a rebound. I don't like getting into a stock like that. Let's look at, you know what? Let's look at ARCs. We haven't done ARCs. ARC Holdings All. I haven't scanned that in a while. So let's see. We've got Checkpoint. Good bullish movement there, even in a bearish market. We've got Buckle, which I'm not a fan of. TMO. What, I mean, what innovation does Buckle have? Oh, it's Miss Daisy. The doggy across the street. 908 devices, HPQ. This is HP Inc. Boy, that's... Phew. You got gaps all the way up in this. But I think it's the guidance of the yeah. I mean, you're at the 200-day on this. Let's put this in. I mean, you find good stocks. And again, if we go over to HPQ and go over to FinViz, PE's 11, forward PE of 7. This is computer hardware. June 30th initiated $32 price target. You're trading at 26. The average target price is 30. You're 21% below your 52-week high. And that 52-week high was just in July. So, I mean, it's just been beaten down. Now, the question is, Berkshire Hathaway is just selling a ton of this. Oof, they're getting out of it. So with Berkshire Hathaway's, yeah. I mean, it could rebound when they're done selling, but BRK.B. Let's see what these guys say about HPQ. Let's look up some premium seeking alpha stuff on HPQ. Ratings. Quant rating, it's all hold. All hold. Valuations at A+. Dividend grade, safety is B-. Let's see. They've got a 3.92% forward yield. I mean, that's not bad. Yeah, and I love Brad's comments on Disney, and he does a great job. He admits that, hey, it might be a long haul on Disney. Morning, Brandon. Is he? Let's see. Let's look at HPQ. Let's look at a long term. What? Hold on. I'll be right. Let me just put the dog under the blanket. Okay. You need to stop crying. You need to start doing your own work. Okay. I've got a dog that needs to go to preschool. So here's HPQ. I mean, listen, if you bought at the bottom of COVID, you're doing great. If you bought back here in April at 40, I mean, did you believe the hype? Blah, blah, blah. Who knows? But no, Brandon. I think it renews. You'd have to talk to them. So the price that it renews at sometimes is the deal that they gave you. But they're super great at customer service. So it will renew at the price that, for instance, the $250 deal that I have right now, I've been told if you talk to them and get that offer. Oh, what did I put? I didn't put. Did I copy and paste this? Let me go to the newsletter. I've been told that if I'm going to copy and paste this into, you tell them that you want code DSP 68. via chat. Tell them that you want to add 12 months at DSP 5068, which is $250. I've been told they will add 12 months to your subscription, which they've told me this is the cost of their market data servers, exactly. Market data servers, etc. So you're getting the platform essentially from them. Yeah. And I guess, I assume that what they did for me in the past, and I'm trying to remember the renewal process because it's always November for me. But what they did for me in the past was they would send me an email saying, hey, you're coming up on your renewal. It will renew at this price. And Brandon, you've heard me talk about like where I've been out of TrendSpider for like 2 weeks at a time, one time, and I just felt naked. That was when they sent me a letter that said you will renew at $780 a year. And I said, I don't know if it's worth it. So I wound up not renewing. And it was, I think, the beginning of November. And this was last year, the year before, somewhere in that neighborhood. But I didn't renew. And so, yeah, Brandon, I was the same way. I felt naked. I mean, honestly, it's so weird how if you get used to the tool and you understand the tool, and I know you're using it effectively because I've seen your posts on Facebook and stuff. With my algorithm, my watch list and stuff like that, and you just get into that system, it is crazy how naked you feel. It is like literally going to a movie theater with no clothes on. That's how naked you feel when you're trading. And you're like, I don't know if it's a good one, blah, blah, blah. Yeah, well, when you got 9 kids like you do, Brandon, yeah. So, yeah, I don't know much about their billing practices. Remember, I'm an affiliate of these guys, so I don't work directly for them. I don't know the behind-the-scenes stuff. I get compensated when you guys buy it, when you click on my link and stuff. And that's, my compensation. The way I get compensated is when you sign up. All of the stuff that I give, in my mind, that's hey, you click on that link, you do TrendSpider, I give you my algorithms, I give you my watch list and stuff like that. So I don't feel like I'm selling anything. The amount of money that I make isn't versus the amount of time I'm on a pauper's wage. But yeah. But Brandon, I would urge you to just their chat page is phenomenal. It's really good. And they're so responsive. I mean, honestly, I haven't had any complaints from TrendSpider's customer service. So, okay, let me just look at, no, that's not one. I mean, this is Spirit Aerosystems. This is Kathy Wood's kind of 101. Joe would probably tell us, get the fuck out of this thing. These are the guys that are doing, and my understanding is this is the company that is doing the fuselage for Boeing. And the reason Boeing is under $200. But, okay, let's go to the Dow. I don't think there's going to be anything in the Dow. I don't think there's going to be anything in the NASDAQ. The NASDAQ is going to have something, but the Dow, yeah, and Brandon, even at 350, I think you'd agree with me. Even at 350, I mean, 250 just seems like a great offer. But even at 350, I mean, in my mind, and this is the way it goes. So you got free tools. And if you got a small portfolio, if you're just starting investing and you don't want to learn about technical stuff, zero, get Fidelity. Fidelity's got the best platform with all the tools that you need. Then if you feel like you want to extend something, I'm starting to incorporate Seeking Alpha, and I'm finding value in that one. I really am. I'm finding a lot of value in that one. This is interesting. Let's see. But it's way up. I'm finding value in this one. I mean, and, just from a charting perspective. I mean, let's go to charting and let's look. 1 year, HPQ's up 4%, S&P's up 14%. 3 years, you look at HPQ, it's up 45%. It's beating the S&P. 5 year, it ain't beating the S&P. It is greatly lagging. 10 year, it is up more. So you've got these peaks and valleys. This to me would tell me, hey, I'm going to trade this one. And so when HPQ has that entry on a thing, I don't want to hold this for long, but I don't mind trading it. And this is where I'm going to redo the core portfolio, by the way. I'm going to take Seeking Alpha, and I'm going to take the returns in my algorithm. And that core portfolio is going to change immensely. I think I'm going to get it down to about 20 stocks. And I think those 20 stocks are good for buy and hold to have a core portfolio, and for a retirement account to trade in and out of, because the algorithm kind of, currently it gets you the stuff. What I'm kind of seeing is I think that algorithm based on the market, if we are in this constrained thing, I think that the core portfolio needs to be updated. So, yeah. Brandon, I don't think you're going to lose the 350. If 250 is their kind of cost, they're happy to make $100, profit off of you. What's that? 30% margin? Let's see. What's 100 divided by 250?
The answer
is 40%. 40% margin. No, and that should be my goal too, Brandon. I just kind of had gotten lazy in this market, and I do the. Honest to God, I spend about 6 hours on this podcast, 6 to 8 hours a day. So by the time that's done, do I want to sit there and learn on TrendSpider? No, I'm supposed to be freaking retired. So, but I do think, there's a place in all of that. So Seeking Alpha would be my next one, because that's $180. I got a $50 off coupon for that one. So that's $180. And you do get some really good charting in there, comparisons and things that you don't get in Fidelity or other brokerages. So that's why I like it. Then the next step on top of Seeking Alpha, I would go for TrendSpider, and I would pay anywhere between $250 and probably $500 a year for it. Each year, it gets way more valuable to me. So, and I think they know that. I think they're not jacking up prices. They're adding stuff. I mean, that assistant is crazy good. Thermo Fisher. Do we care about Thermo Fisher on a pullback? It's just oversold, and it's such a good company. I mean, it's touching the 200-day. Look, you haven't touched this 200-day. Even during COVID, you didn't touch when the world shut down. You didn't touch that 200-day. Now, last time you touched the 200-day was 2012. I'm putting Thermo Fisher in there. It's too good of a company. I don't think that the valuation is crazy. Let's see. Thermo Fisher. Diagnostic research, PE is 34, forward PE of 20. Average target price is 669. It only got to 609 before it kind of pulled back. Let's say diagnostic research. Let's pull back. Let's look at the PE. Thermo Fisher is down here. So it is one of the biggest PEs. You can see it's number 4 in diagnostic and research. Danaher might be a better option. Quest Diagnostics. I'm going to put it in there. Why not? Let's look at what Seeking Alpha says about Thermo Fisher. TMO. Let's go summary. COVID weakness likely to end with potential growth resumption. I do think, again, I don't think Thermo Fisher is just COVID. For double-digit returns, that's August 28th, August 29th. They move it to buy. So you've got rating summaries. Seeking Alpha analysts, buy 3.66. Wall Street analysts, buy 4.14. Quant, hold. 5-year up 107%. What's this advanced? Let's see. Ooh, I can draw on this stuff. One month. I guess that this is, let's do it SMA. There we go, moving average simple. And length, 200. That's the 200 day. Okay, I ain't starting it. I fucking crackhead. Penny, what are you doing? Do you want to get up there? Can you not jump up there? Hey. Get. No. Who's out there? Okay, you can jump up there. Get under your blanket. Okay. Dude, get my freaking dogs need a job is what they need too. Okay, that's the S&P. Okay. You know what? Let's do the energy sector too. Let's see if anything crazy comes up in the energy sector. Helix, HPK, High Peak Energy, fuel cell. TH, Target Hospitality. PVL. TLZ. You know what? Let's look at one of the energy names that we've traded in the past. REI, just because we like the ring energy. We like the symbol. 4 hour. Is that the old line? Yes, it is. Yep. That's the old line from way back here, where it was 250. And look, it provided resistance on this run. So July of this year, 164 went to 250. And then earnings came out. Boom. Boom. Okay. So let's go back over to the strategy tester. And we're going to go to our algo. And let's run SPY. And TQQQ. Let's see. Latest insiders. Therapeutics, $25 million. Whew. Let's see. This just came out, so they're just putting in their initial buys. Hey, anybody want to roll the dice? Roll the dice on that one. Asana. Wow. It's a big company. I mean, what did he buy? Let's see. President and CEO bought all the way through. I mean, look at how much money he's buying at 20, 21, 17, somewhere. I mean, he bought a bunch in the 20s. And then he doubled down and bought 8 million more when the company sank. Or I'm sorry, 18th and 19th. So 1830, he bought on the way down. I mean, this dude's been loading up on this stock. I wonder if he's getting ready to take it private or something. Nah, I mean, it's got a $3.76 billion market cap. So he'd have to own a bunch. Let's see. Let's click on his name because you're going to have it here. Yeah. Look at how much he's bought. This is September, August, July, June, September. So in between there, he's got February 24th. This goes way back. ARLP. Alliance Resources Partner. Ooh, look at that trend. Wow. Look at that one. 12% dividend too? Sign me up. I'm bringing that one up in social suggestions. Run with a 12% dividend. Let's see. Any insiders? President and CEO March. I mean, that's $1.8 million at what, 18? Now it's trading at 21. I mean, that was way back here. He bought at the lows. Target price is 24, so you still got what, 11%, 12% in there? And its 52-week range is 25, so I like this one. It's a coal stock. Here's a... Let's bring this up. I'm putting that in there. Case in point, it's a diversified producer and marketer of steam coal to major U.S. utilities and industrial players. It pays quarterly dividend 70 cents. Alliance starting in mind. Don't miss. Elon has reported bought 6,000 acres of land outside. Alliance is approximately 580 million. Yeah, I like this one. I like this, Joe. Good call. Okay, FinViz. We got this one. We've got Try Automated Chart. We've got that. We've got this offer. I've got Webull. I've got Seeking Alpha, which we're going to use for some stuff. Let me see. I've got... Okay. We're going to go here. Wah. Okay, I'm going to start the podcast. I don't think I'm lagging at all. I may start lagging when it starts recording. So if I start lagging, you guys boom me and hit me up. By the way, if you're here, hit the thumbs up. Make sure you're subscribed. I'm here every Monday morning. Okay. She's talking about the salmon. I got a text. Yes, I have friends listen. My friends listen in. I started a Patreon, by the way, which is funny. Let me see. I think it's what did I decide to charge. Patreon. Let's see what happens. Log in. I think I've got it saved. There we go. And I started a Patreon. I don't think anybody's listened to it. Let me see. One-on-one meeting. What do I charge? Let's see. Start selling digital products. Oh yeah, $1,000 a month. One-on-one meeting with me for $1,000 a month. And shocking, nobody's taking it. I'm gonna bring this up. Why not? Patreon's been sending me messages, so I'll do the grift. Okay, why not? Okay. Your job is, if I start lagging or anything, hit me up in the comments. I usually don't pay attention to the comments, but I will. Do I have that note about Amazon spending money on AI? Yes. Okay. Let's go TQQQ. Let's go QQQ. Because I'm going to get rid of these symbols too. Boom. Remove all annotations. There we go. Okay. Come on, TrendSpider. Work for me. I think it's erroring out. There we go. Okay. Wah, 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 wah. Okay, let me hit record. Good morning. Happy Monday, September 25th, the last Monday in September. If you remember, October is seasonally weak as well. So it's not like we're out of the woods. Here's SPY, on TrendSpider. I wrote a free Saturday newsletter thanks to TrendSpider. And the reason it was free was because they're offering listeners of this podcast, listeners and readers of the newsletter, they're offering a $250 price for the year, on TrendSpider. And essentially, that's this middle tier, the Elite. This is what you need for my algorithm. Typically, you can skip it and buy it for $468. It's normally $780, but it is $250 for the year. You skip the 7-day free preview. You are charged immediately. If you want to take care of this offer, or use it. I mean, $250, come on. For 1 year, it basically covers their operational costs, market data servers, etc. You're getting the platform where they just cover the cost for you. So that they're so sure that you're going to like it. They're giving you 1 year of this to do it. And a lot of people, even Brandon here on YouTube, he said, hey, I'm not going without it. Once you get this thing, set up, and you get what you get from me is you get my algorithms, the 65-minute, the 4-hour, you get the watch lists, you get the scanner. So everything that I do in this podcast, on this video, you can do by yourself. You can take a look at this stuff. So you can get alerts. You can set all that up. I don't use half of TrendSpider. And Brandon brought up a good point. Maybe what we should do is start with one feature per week, or maybe even per month, that we become experts on. But it's $250. How do you get it? Well, you can go to this newsletter, go to dailystockpick.substack.com, click on this free Saturday newsletter, $250 for TrendSpider Elite for 1 year. And you go to this link, right here, TrendSpider, typically $750. You can click on the picture. Use DSP 68. For any listener who took advantage of another TrendSpider offer and you're currently in a program, TrendSpider has told me that you can add 12 months to your current subscription if you chat with them and say you want code DSP68. I have not gotten feedback on this. I have a friend who wants to do it, so my email to my buddy over at TrendSpider is out. This offer ends September 30th. So if you're thinking about getting TrendSpider, hop on it. Again, $250. Make sure, A, you're interested in technical trading, because this is not a plug-and-play kind of thing. You can absolutely use all of my imports and take a look at it. But understand, it is technical. There is no fundamental stuff. This is not a news situation. They do have news. They have other stuff. They have unusual options. It's a super, super robust platform. But you have to put in the work to do it. So understand that that's the case. But definitely take a look at it. I'm selling that one. I'm also a partner, by the way, with Seeking Alpha. You can get Seeking Alpha, $50 coupon. It is normally, $239. You get it for $189 a year. I'll have some links down below. I'm just getting started on this. But one thing that I do know about Seeking Alpha is it's probably going to be pretty ingrained in my process now. I was doing this newsletter over the weekend, and the newsletter basically looked at the core portfolio, SPY. It looked at QQQ, and then I went into Apple, and then I went into here, Apple versus SPY. This is a 1 month return, 1 week return, month to date. Month to date, Apple is down 7%, SPY is down 4.6%. So you can see Amazon here, but I will start using Seeking Alpha for more of this. Costco versus Walmart versus Target. Devon Energy versus the XLE. I am going to redo the core portfolio based on Seeking Alpha. What I realize is that core portfolio should come down from 35 stocks down to probably somewhere in the neighborhood of 20. And so if you want to keep track of that, go over to Savvy Trader, SAVVY trader.com. By the way, if any of these links you can get here on my link tree, linktr.ee/daily stock pick. But Savvy Trader, I do have this core portfolio here, and I don't change it much. I inserted Eli Lilly. I took out one. I forget which one I did, but I'm going to take out Target. Target should come out of this one. And it's clear to me Target should come out based on writing this newsletter. And again, the newsletter is more me looking at stocks, understanding which ones are hot, which ones are not. You can see Pepsi and Coke. To me, both of those, I have those because I drank cola. I always thought they were good investments. Well, turns out neither one of them's beating VOO. So I'll probably start trimming those two and moving them to VOO. Shopify and Tesla, Uber. I gave you all my thoughts here on this one. Any comments that you have on it, leave them down below. I don't know why the Costco one's not coming up. Costco, there's the stock. This is just a great stock. But you can take a look at that one. Again, if you want the offer, I like this thumbnail, by the way. I look buff on that thumbnail. That is artificial intelligence, just so you know. But the process is sign up for TrendSpider. When you get that, then just email me at dailystockpick3@gmail.com. I'll send you back the welcome letter. And the welcome letter includes links where you can import everything. And I am going to 100% promote my grift at this point. My grift, I signed up for a Patreon. And I set up a Patreon. It took me like 5 minutes. I haven't even added a headline. I haven't done anything. But if you want a one-on-one session with me per month, $1,000. This is my grift. I will entertain you. I will go over stocks with you. I will watch your dogs do stuff on camera. It will be a Zoom meeting. I will not be doing car rides with anybody. But yeah, if anybody wants $1,000 a month, I'm here for you. Let's take a look at some of the stocks. Let's see. We're going to go to this. This is the heat map for Friday. You can see Tesla down 4.23. NVIDIA was up. Apple was up. Meta was up. You can see Microsoft down. We're in a period where it's a little funky right now. I just think that we're range bound. And I went over that in the newsletter. SPY over the last 15 years, this week is the worst performing in terms of win percentage per week. And how do you find that? Well, you can go into the seasonality of TrendSpider. And if we go, let's just go back. Let's go back to 1999. We'll go January. And we'll do week of the year. Go back to January. Look at the 39th week. I mean, the 39th week, the end of September, end of a quarter, it is just not a good week for stocks. So what are we doing? Well, if you believe this seasonal data, then maybe you want to short something like SQQQ. And part of the reason I say SQQQ is because there is a technical, we went below the 4,300 level on the S&P. So the S&P does 500 stocks. The NASDAQ QQQ does 100 stocks, and it's typically focused on technology. Let's go over to Seeking Alpha, and we'll go QQQ, and we'll do a charting analysis. We'll go to charting of QQQ, and let's take a look at the difference between that and the S&P. So we can go year to date. Look at that. Even if I get, let's select symbols. We'll take SPY, because say you want to look at SQQQ, QQQ versus SPY. So the first thing that I would do, SQQQ, let's run it. Let's see. Let's run the algorithm on this one. SQQQ, you are a buy at 1863. You are currently at 2066. You're touching that 200-day. But let's take a look at QQQ on the daily, because if some of the tech traders are correct on a daily, if we go back here, they're saying the next support level, and you can see it clearly right here, is there's a volume gap there. Let's pull this to its lows. We're going to pull this right here, January. Let's just do this year. So where are people holding QQQ? They skipped this entire level. There's a gap down here. This is the daily. So if I look at where we are now, down to the 200-day, which is where people think that we might go, you're 7% down. If that's the next technical stop and QQQ winds up going down there, mind you, that is the VWAP as well for this year. So the volume weighted average price. If that's the case, you want to go with SQQQ. And remember, October is weak as well. So not only are we in the worst week of the stock market for 23 years, October is weak as well. So if you think we're going down there, SQQQ might be your play, because look at the difference. I mean, QQQ has returned 35%. Either this is going to come way up and meet that, or QQQ is going to come down and meet SPY. They're going to meet in the middle at some point in time. So look at the 1 year, look at the 3 year. I mean, QQQ at the 3 year level, they're about the same. At the 5 year level, QQQ beats it, doubles it. So I do think that there's an opportunity. SQQ might be your play, and it has been the play since $18.63 at the beginning of September, and you've got confirmation in it. So I want to make sure that's the case, that for the bears. That's it. If we look at by the way, I love Weeble's app. I can't show it on here, but I took some screen grabs that I'll put in the newsletter. The economic calendar came out. Costco, Accenture, and Nike are reporting this week. Those are the big top 3 companies that are reporting. Large cap companies on the major economic news. We've got durable goods coming out to Wednesday. We've got GDP growth, quarter over quarter, final coming out on Thursday. Core PCE price index coming out on Friday. Personal spending month over month and personal income coming out on Friday as well. I love Weeble's app. And if you want to sign up for Weeble, there's a link down below. You get free stocks. But let's talk about, what am I going to go to? 200-day, I wanted to talk about Costco. Costco's in the core portfolio. They report, I think it's tomorrow after the bell. Let's take a look on TrendSpider. It is September 26th, which is tomorrow, post-market. Now, this one in the algorithm has you in at 539. The algorithm, by the way, makes you 37% over 24 month. If you just bought and held the stock, which I do suggest you make 20%. 20% over 24 months, that's nothing to sneeze at. This is a quality stock. Go to a Costco parking lot on a Saturday. Look at how much people are buying. Look at how many members. They have started basically cracking down on members, making sure that when you walk in, you have to show your membership card. I like Costco. My parents are members. I am not. It doesn't make sense for me as a single person living alone to shop at Costco. I don't need 35 pounds of peanuts. So I don't need 14 pounds of tortilla chips. Riced cauliflower in a bag that would last me 4 years isn't going to last in my freezer. So I'm not a big fan of Costco for myself, but anybody that lives with somebody else, absolutely. That membership program is phenomenal. You save a ton of money just on freaking paper towels alone. Now, mind you, I use 4 rolls of paper towel a year. So I'm a bit of a minimalist. I believe in recycling and not using single-use stuff. So I wind up not using paper towels. The only thing that I could benefit from Costco is probably toilet paper. Honestly, probably use it, more than I eat a lot of dates. Let's just go over that. I eat a lot of dates. Somebody said I don't focus on nutrition. I focus on fiber like you would not believe. I am 53 years old. Fiber is a mainstay in my nutrition. So yeah, toilet paper is probably the only thing. They report the last earnings. You saw them rise. They were trading at just below 500. This was back in May. You had your ex-dividend date. I would expect some type of news in this. I've been saying this for the year that a membership increase is coming. You can't continue to have increased cost, increased, reduction of margins, where they basically sell a lot of their goods for cost. The big thing is with Costco, are they going to raise the price of the hot dog? They ain't going to raise the price of the hot dog. Hell no, they ain't going to raise the price of the hot dog. They will lose money on that hot dog. You know what they're going to do? They're going to source a cheaper hot dog. They sell a ton of freaking hot dogs. I've never had a Costco hot dog. You know why? Might interfere with my fiber diet. Although maybe I should go over there. I tell you what, when I'm in New Jersey, when my parents are, I will take the Costanzas, as my parents are known, to, we'll go on an outing to, and I'll videotape it for you. We'll go get hot dogs so you guys can hear the complaining that goes on. What are we doing here? Why are we eating hot dogs? This is disgusting. Don't you know? I don't like meat. And then you get some turkey and she's fine. But yeah, we'll hear some complaining about that one. But yeah, Costco, I can't imagine that you're going to, 5 years from now, be upset at buying Costco. It's got a $247 billion market cap. Target price is $569. You're trading at $559. You're going to see a bunch of people come out probably when they report. Walmart had really good earnings. In fact, my weekly stock, his pick this week is Walmart. Walmart is a mainstay, and I do have it in the core portfolio, I believe. I closed that. I do have it. Yeah, it is in the core portfolio. It's right here in TrendSpider. I have it in the core portfolio. This is a stock that does really, really well because of their grocery business. The algorithm makes you 20% on this versus you make 13% over 2 years if you bought and held. I buy and hold it. I just buy and hold it. When it touches that 200-day, I want to buy it. Now, am I buying this week? You're buying into weakness. This is one of the first My Weekly stock picks. And if you're not subscribed to his newsletter, myweeklystock.substack.com. It's phenomenal. It really is. He's down 5% this year in an up year, which is crazy to me. He focuses on 30 stocks. The Dow is only made up of 30 stocks. But you can see 2022, he was up 13%. This is an outlier year. Hasn't had a lot of luck. And he's been hit by some big downturns on his picks. I don't expect this to be a big downturn. I expect Walmart. I think you can buy it. My preference would be to wait until my algorithm says to buy it. That's me personally. But remember, his process and his system is buy on Monday, sell on a Friday. And over the years, look, 2019, 2020, 2021, he gives you all of his performance. You can click on that and just look at the spreadsheets. I mean, where's his performance spreadsheet? He's got it up here. There's a link to it here. You can absolutely 100% look at it. He is completely transparent. And I like that. That's one of the things that I really like about him. But Costco reports Walmart is the weekly stock pick. The other one that reports this week that is interesting, that I would not buy, but it's Nike. Nike suffers from the same thing that Target does, which is their management just hasn't managed inventories very well. Now, the algorithm loses you 6% on this versus losing 39% over 29 months. So again, the algorithm in TrendSpider works out. You do not have confirmation. You don't have anything that is telling me absolutely buy this other than the valuation of the company. But if their inventories are up, and they haven't been able to get rid of them. If China is weak, if China is weak, you're going to see the stock go lower. Honest to God. I mean, look at it. It was the October lows of 83. You could absolutely get back to that. This is not a better company than it was last year. Last year at this time, it's the same company, if not worse. They have an inventory problem. So if the consumer's getting weaker, these guys will get weaker. So Nike is one that I don't think you should buy. At some point, this becomes a buy, though. There was a good discussion I saw, a good debate, Nike versus Lululemon. And the debate was, are they the same company? But if we go over here to Seeking Alpha and we put in Nike, let's look at Nike's. We can look at the summary on Seeking Alpha of Nike. Wall Street, hold, buy. I mean, Wall Street analysts have it as a buy. If we go over to charting and we look at this against the S&P, 1 year, it's doing horribly. 3 years, it's doing horribly. 5 years, it's doing horribly. There's no reason to do this. Meanwhile, you put in a company that is doing well, Lulu. And let's look at this. I mean, 5 years, Lulu, incredible. 3 times the S&P. 3 years, you're looking at Lulu, it's underperformed the S&P, but it's outperformed, tripled Nike. 1 year, look at Lululemon, up 30%, doubled the S&P. Nike's down. Year to date, look at Lulu, 19% versus 12% on the S&P versus a loss of 24% in Nike. So the choice is clear. I just say you stay away from Nike. Let's see, valuation. Let's look at some of the PE stuff. Yeah. I mean, it's graded. The valuation is just too crazy. If we look at Nike, their PE is 28. Their forward PE is 20. That's expensive. Go to the footwear and accessories. And you look at this one. Let's rank this on PE. We're going to go PE. On holding is the biggest one at 200. Nike's second at 28. On holding is just one of those that they're at 200. And the reason they're at 200 because they're growing so much. So the stock is just there. And we'll look at on. There we go. On holding. If you want to compare the two, on holding's a rather new one. I've said that this is a $30 stock. It did hit that $36 mark. This over 2 years, the algorithm loses you 2.1%. The actual stock performance, you're down 23%. That 200-day has just started moving negative. You had that death cross. I would stay out of this one for now, but trading this one does make sense because it is a big mover. Now, I want to talk about Netflix and Apple. We had a agreement with the Writers Guild, which means that the actors are probably going over. I will include this article in my newsletter, but Apple has the world's second most loyal customers. First most loyal customers, Netflix. What do I think you should buy? What was in my newsletter as one of the best buys right now? Netflix under 400. You do not have confirmation. The MACD is starting to cross. In my mind, I don't think you have to wait. I think you should do it. I am in this one at about 420, I believe. I will be buying more. I'm just being patient. Remember, we talked. This is the worst week of the stock market for SPY, for the S&P, going back 23 years. So I don't want to rush into something, but you've got to keep your eye on stuff. And that's where TrendSpider comes in. I can set up an alert for when this stock, create an alert at this time. So we want to say the EMA 9, when it crosses up, we want to say, we'll say sensitivity is, we'll do 75 cents. 10 days have passed. Let's see. We'll put in our note, Netflix cross up. Let's say breakthrough. We'll do that. Boom. Now, what do I get on the 4-hour EMA? When that breaks through that 9-day, boom, I get a text. That's why I like TrendSpider. I don't have to sit and watch charts. So this article tells me that remember, their last earnings, they said they will realize the earnings from the password crackdown in the next quarter. What were they trading at? 457. That kind of went down. You've lost it here because of the writer strike and stuff. Writer strike's over. The actor strike will be resolved. You're going to see this one fill this gap back up to 470. So don't say I never gave you anything, because that's one. And if you want it to, you can tip me if you want. Amazon came out today. Amazon is investing $4 billion in Anthropic. I will include a news story from Seeking Alpha on this one, but I'll take a look at it. $4 billion in Anthropic, which is a competitor to ChatGPT. That's AI. I mean, these guys are going to be an AI player. They are already an AI player. Amazon, absolutely down here at the 200-day, start to buy once it has confirmation. And I got a question from a new listener. What is confirmation? Well, confirmation is different for every trader. For me, it revolves around that 9-day EMA. I will look at different time frames on charts. For instance, if you go up in a chart, say I go to weekly, you're going to see it's not touching that 200-day. It's below that 200-day. Right now, Amazon's using that 200-day at about 136, 140 as its resistance level. The 50-day has started to turn positive. So on a weekly, you absolutely would be bullish on Amazon. But the MACD is up and it's crossing down. Your RSI is at 54. It's in no man's land. So let's go down to a daily. If we go down to a daily, we can see it's not quite touching that 200-day. It's above the 200-day. Looks like it's run all the way since May. This is a daily. You covered that gap back down there. You've got some volume up here, level shelf, but big volume shelf over down here at 104. So if we start coming down, the VWAP is about 114. And you can move this line in TrendSpider. This is your volume level line. If we take this back to October of last year, where they were trading at about 114 and they dipped down, you can see you got some volume here. The majority of people bought during this time, and they're holding during this time. So as far as confirmation goes, that 9-day EMA is moving down. You are below it. The stock price is below it. Once it touches it or moves, just like I said with Netflix, once it moves above that, I'll start to look to add. I want to miss the first 10% of a run. I'd like to get the second 10% of a run. It's risk versus reward. That's as simple as I can make it. I will do a short on confirmation, probably on YouTube or something. But Amazon in me, I'm pounding the table on this one. It is expensive. If we go over here, let's look at FinViz. The PE is 102. Forward PE is 40. So they're going to continue to grow. They came out this weekend that they will start charging Prime members to avoid ad business. These guys are making a fortune off the ad business. These guys and Uber. That's an unrealized gain in the stock that you're going to see an enormous amount of ad revenue from those two companies, Amazon and Uber. You're starting to see them rival Google in the ad business, rival Meta. And Meta's just so cheap. I mean, when the ad business starts to come back, if the consumer is slowing down, the ad business is slowing down. I mean, Amazon and Google haven't seen it. Meta hasn't seen it. Meta's just printing money. So, speaking of Meta, they will launch new chatbots with personalities this week. That's according to some report. They haven't confirmed it. But Meta under 300, grab it. Just grab it. You know, we talked about weekly charts, daily charts. This is a 4-hour chart. This is my algorithm. It got you out. Doesn't have confirmation. The MACD's right on the oscillator line. The RSI is at 45. Their earnings are coming up on October 25th. I like it. Under 300, I say get it. Now, understand from a long-term standpoint, look at this weekly. If we go back here, this was October lows of last year. You were at 100. You are at 300. That's triple your money. You haven't gotten the golden cross of the 50-day crossing up on the 200-day. That's why I say I think this one's going to 400. But the economy, the consumer, and the ad business needs to stay strong. So patience, just patience. But under $300, I think you could absolutely buy this one. Tinder, as a single person, I will tell you, this was interesting to me. Tinder is offering a $500 per month premier service. Who owns Tinder? It's Match. Match owns Tinder. MTCH is the symbol. This is one of, if you follow me on Savvy Trader, you know I follow Bradley Ferguson, Stock Nerd. This is one of his picks. He's gotten it. I don't like this stock, and the reason is, personally, I just have never paid for dating stuff. As a single person, I use the free apps. I use the free portion. That's been plenty for me. And yeah, I'm pretty antisocial. But yeah, I just haven't. It shocks me that people will pay $500 a month for a premier service like that. Whereas some people would give me a hassle about a $250 offer on TrendSpider. Okay, I will get anybody who's willing to pay $500 for Tinder per month. Pay the $250 for TrendSpider. Become a millionaire. You will never have a problem on Tinder. You know, flash that Lamborghini. Flash that big house. Have a nice home to take people back to. I don't have a nice home, but you know, I'm a millionaire in hiding. But God, $500 a month, it shocked me. Now, if this takes off, yeah, you'll have a big response from that. Social requests. Gary, thanks for the deep dive into the core portfolio. If you didn't see it, it's a great newsletter. And Clark, thank you for that one. And on the pod on Saturday, once again, it was just what I needed when I needed it. I've done well in the past. Melly, I want to get back in. Would love to know what your thought is on a re-entry point, a new position. I've been looking at around 124 to buy and hold. Let's look at Melly. And if you don't know about Melly, this is Mercado Libre. Mercado Libre. So you white boy American doesn't know how to say it. I have no freaking idea. But this is one that has been traded. I've traded it before successfully because if you look at it, we're still in an upward trend long term. From a October of last year, July of last year, we're still in an upward trend. You're just getting the golden cross. I don't think this is a bad one to buy. Where do you buy it? That's kind of the issue. The algorithm makes you 5.4% versus if you bought and held this one for 2 years, you've lost 31%. So this one has been up and down. Again, it's the Amazon of Latin America. I think this is one that just is oversold right now. You look at that RSI at 25. You look at that MACD way down. You're crossing this 200-day. Now, 1,264 seems to be the 200-day on here. If we go to the daily, I'm moving from the 4-hour to the daily just to kind of get traditional, you can see that the 200-day is down at 1194. Now their earnings are coming up on November 2nd, so you've got some time. I would be patient. You're just crossing this 50-day that's out there. Let's take this. Let's see where people are holding this from. Let's just take it back to this year. So people who bought this year, where are people holding? They're holding right about that 200-day between 1205 and 1226. If this is a long-term play, I would say you just get in now because, again, like I said, in a weekly, we're still in an upward trend. We haven't broken that upward trend. If we take this and look, we're just going to go back here to the June lows right there, and you need to touch 3 points. So we're going to touch the bottom 3 right there, and we're going to touch the top 3. The top 3 would be right there. So this channel, again, it's an upward trend, and you could take it from this point back here, 2021, where we were at the highs. But I think you're still in an upward trend. You're above the 200-day. So you've broken that line. Your 50-day is starting to move forward, and this is a weekly. And if you get that golden cross on the 50-day, you're going to continue in this channel. Now, you're towards the bottom of this channel. So if you break that channel, what I would do, this is the trade that I would take if you're trading it. I would say, hey, I'm going to buy here at 1282. If I touch this and break through that bottom channel at about, I'd say 1200, I'd get out. I mean, I would just get out because I do think that, I don't know enough about Latin America. I don't know enough about Melly. I mean, let's go over to Seeking Alpha. What do these people think about Melly? Let's see. If we type in Melly and the valuation is F, it's probably expensive. Let's see, valuation. Yeah. I mean, wow, it's kind of high. Let's look over at FinViz. I'm used to looking at FinViz. I still got to work Seeking Alpha into my stuff. But yeah, PE's at 86, forward PE at 44. It's up 51% year to date. Your average target price is $16.39. Your most recent is from September 1st. They moved it up to $16.50, and you're trading at $1,200. So understand that those guys are monkeys. They don't always know it. But here's the thing. Look at that PE right there of 86 to forward PE of 44. Let's take a look. I was just pounding the pavement on Amazon. The forward PE is 41. The PE is 103. So if you're buying the Amazon of Latin America, you're actually getting it at a cheaper price than Amazon here. So, and they're up about the same because these things trade similarly. Clark, I would say that's probably your best bet is to, if you're going to trade it, use the bottom portion of this. And what I'll do is I'll put this in the newsletter for you so you can kind of take a look at the chart too. Let's see. Hopefully you're subscribed to TrendSpider, but we're going to take that one and we're going to put this in the newsletter. Okay. Next, social. And yeah, this is what you can do. You can send it to your friends. You can say, hey, I got a killer stock. Scott from Facebook, thinking at these levels, it might be a good idea to dollar cost average AMD and Disney. Just don't go crazy. So I will say Disney. We'll start with Disney. I think Disney is similar to Target. I don't think that you touch Disney until their earnings. And I know Bradley Ferguson has started his position in earnings, and most traders will say, hey, don't wait for earnings. Don't trade around earnings. What I'm worried about is that Disney has more bad news. And November 7th is their earnings. I just wouldn't touch it. Again, we're in a weak period. Doesn't mean that it's not a great value. Let's take a look at a monthly chart. This is super, super long term. You're touching the 200-day. You are trading at levels right now that you were back in February of 2014. Your MACD has never been this low. So I want you to make sure that you're aware of this. This is a beaten up stock. So it does make sense long-term if you believe in the long-term viability of this. It does not mean that just because it's beaten up, you can buy it. Let's take a look, for instance, and I think I've shown this one before. GE. we'll go to a monthly look of GE, because when I started investing in 1996, GE was the king. And it was probably 1986 was where I was. But it was the king. And you couldn't go wrong with GE. And take a look at it. I mean, you were at $9 here in 1981. And by the time you got to 2000, you were at 410. And GE was, they had a financial problem. It was they were pumped up way too much. And they basically got too big for their own good. That could be Disney. Well, if today is August 2000 of Disney, of GE, in Disney, you're never going to recover. You'll never recover. Now, mind you, GE is now in an upward trend, and it has been going just gangbusters. Down here, November 2022, at the lows, you were at 60. You've almost doubled your money in less than a year. In less than a year in GE, you've almost doubled your money. Is it back? 200 days still moving negative. The 50 days just moved positive. This is a super long-term chart. This goes back way, way before. But in my mind, I think Disney could be the GE of now. The reason is because it's not super cheap. It is trading at 16 times its forward earnings. Its PE is currently 66. It just isn't super cheap. So I don't know that you necessarily go in expecting this one to rebound. Now, Iger is a great CEO. I think, I think they've gotten themselves in with the Fox deal. I mean, Rupert Murdoch looked like a freaking genius now because the Fox deal sent Disney into debt. ESPN is just bleeding money because they bet the farm with Charter. Charter said, hey, we don't want our customers to pay these high prices for the Disney bundle. So what did Disney do? They pulled their channels. So and Charter's called them on it. So I just think you be careful. That is one. Now, one that I don't think you necessarily need to be careful with is AMD. This is the other one that you brought up. AMD, in my opinion, is probably the best bet here. The reason is I do think that their chips are the second best in the industry, and they are making ground. NVIDIA is by far the best chips in the industry. NVIDIA is down at it's up 1.51%, but it's at 422. Remember, I sold that one at 505. But AMD, in my mind, is a good one. I hold this one. Now, I just recently bought this one at 109. This one got me in at 106. I waited a little bit, bought it at 109. Am I upset? No. I think long term, again, you had the death cross. What I would wait on this one is for some type of confirmation that we're moving up. This one is still expensive. Understand that the reason NVIDIA came down is because it's expensive. AMD is losing $25 million. They will probably turn a profit at some point in time. They are up 48% year to date. So you're just this is a daily chart, and you're just in the middle of this. So if we take a look at our algorithm, we don't have confirmation. We don't have a buy in the algorithm. The RSI is at 28. Their earnings are coming up October 31st, and NVIDIA is having a crazy good event in October to highlight their products. But let's take a look at seasonality of AMD. So weekly for the last 19 years, this is one of the worst weeks. So I'd probably wait. Next week's going to be a good week, but then you got a couple of bad weeks again. So I would probably meld my way in a little bit, but understand that you are in a weak time right now. And higher for longer hurts this. They're not making money. It's definitely one that you want to be careful of, but I do like it. Joe brought up a great one that really looks good. ALRP. This is a coal stock. And if you guys know, I'm big on energy for the fourth quarter. We've seen energy kind of rise. The oil prices are going up. ALRP is, oh God, come on. ALRP. What is it? Yeah, it is ALRP. No. ARLP? Yeah, ARLP. ARLP is it. Allied Resource Partner. I wrote it down wrong. ARLP. We'll put that in. ARLP. Boom, boom, boom. Oh, and great. The Republicans are threatening to oust Kevin McCarthy. So ARLP, this has been good. Look, that buy at 20, you're almost up 20% to 22. That buy at 20 is great. The buy back here in June was even better at 17. When this is a coal. Again, this is a coal one. So its PE is going to be low. It's crazy. That dividend right there at 12.84%. Year to date, you're up 7%. This one's not even at its 52-week, which is 25. And you know what? Its target price is 24. It's not covered. This is not covered. This article, this coal stock is paying 13.7%. Is it worth it? This is from September 14th. On September 14th, we can go back to September 14th. This was trading at around 20. So, And so that 12% is based on today. I like this one. Joe brought this one up. I think it's really good. ALRP. You know what? I'm going to put this in our energy stock. In our energy stock list. Energy names to trade. Yes. We're going to put it in there. It has been updated. And you can, if you're in TrendSpider and you're part of my program, you will now have ARLP in your energy list. So scans, there weren't a lot. And recognize we're at a week period. The market is open now. I think it's down a little bit. We can take a look in a little bit, but I think it's down. Let's see. This is usually 15 minutes delayed, but we'll see it. Home. Yeah. Advancing, declining's outweighing. Dow's down 0.24. I mean, you're just flat. I mean, it's just super flat. Look at this. SMA 50. You only have total above the SMA 50. Above 20% of the S&P 500 is above their 50-day. SMA 200, only 34% are above the 200-day. So it's just crazy week right now. BABA is the first one. BABA is the first cross up, 88.25. When I talk about cross up, it is a MACD cross up. This is based on my algorithm. I scan based on my algorithm. When I talk about a cross up, it is the algorithm entry point. And a cross up is based on, because my algorithm is based on the MACD has crossed up. If we look at this in TrendSpider, you can see the MACD has crossed the strike line. If you don't know what a MACD cross up is, Google on YouTube. Watch a video. That's how I learned about it. But that's how you get in. Part of my algorithm is MACD cross up. So BABA had one at 88. Is it moving? Maybe. Another one, HPQ had a cross up. This is one we took a look at this one in just before with some folks on YouTube. This one has a cross up. It is not above that 9-day. It is definitely a risky one. The thing you have to be aware of in HPQ is the greatest investor of all time has been selling this one. And I'm told he's selling it at a loss. Look at this. September 11th, he started selling 27 million, 48 million, 82 million, 45 million, 48 million, 35 million. He's selling around that $30 to $26 range. I would be interested to see if when he's done selling, we see a pop. I would wait for this to cross that 9-day. So HPQ is one. The third one, and there's only 4 in here, is SGEN. SGEN. SGEN is I think it's a technology company. Let's go over to FinViz and look. Because I think it's a little bit extended. I'd be a little bit careful of this one. SGEN, they're not making money. They're losing 725. It's a biotechnology company. I knew it had something to do with technology, but it's a biotech. Be careful. I mean, the MACD is crossing up. Yes, it's a secondary cross up because the initial cross up was back here on the 23rd, and the algorithm has had you in since 195. You're at 214. It is an upward trending stock in a downward trending market. That's a good thing. Next one is another healthcare, TMO, Thermo Fisher. This one's interesting to me. I've traded this one before. It is definitely in a downturn. Again, you don't have confirmation, but it is in an oversold territory. This is part of the COVID hangover. It is one that is heavily tied to COVID. I don't think it's directly tied to COVID. In my mind, it's a much bigger company than COVID. But this one is pulling back towards its 200-day on this weekly. What I want to point out is that you go way back and you can't see it touching the 200-day. We're back here. The last time it touched the 200-day was 2012. So 11 years ago. It hasn't touched. Even COVID didn't bring it down. Even the October lows of last year did not bring it down. It is currently down there. So again, I think this is more than COVID, but I think that valuation is starting to come in. If we go to TMO and we look, the PE is 34. The forward PE is 20. So it's only got a 0.28% dividend. Year to date, it's down 8.73%. I think it's just a COVID hangover, and it stopped its run up. So I'd be careful of this one, but I do like it on a pullback to at least get back to 550, because if we go over here, the average target price is still 669. The latest coverage, Citigroup resumed coverage buy, and that was September 6th, 625. So they see something that they like. You can load up on Morgan Stanley says about these three stocks. Tip Ranks has it, and I think what are the three stocks? Homeat Aerospace. We can look at, if you want, I'll include this one in the newsletter. We'll put that one in there for Thermo Fisher. But that's the whole podcast for today. Now remember, if you want the TrendSpider, if you see the charts and you like the charts, TrendSpider, $250 a year. It is exclusive to this channel, this newsletter. Sign up for the newsletter at dailystockpick.substack.com. If you don't want TrendSpider and you want something a little bit more fundamental, Seeking Alpha. I'll include a link to it. I'll put it up on my link tree as well. Seeking Alpha, it's $189 a year, normally $239. You get 50% off. I like this. I think this is absolutely worth $189 to me with what I've started to use it for. I have not gotten into the entire portion. There is a stock screener. There's an ETF screener. There is a top stocks pick. Find and compare. I love the investing groups. Find an investing group. Market data. You get stories. You can take a look at this. This is what I like. Look at this. I mean, this is live real time for $189. You can see energy's up 4.42. What are the weak sectors? Well, utilities, 0.76. We talk about Walter all the time. Look at the 52-week range of these. So if you want something that's beaten down, consumer staples, XLP. You want something that's doing really well, XLC. It's up at up close to its 52-week range. X Energy is up close to its 52-week range at 94. So I like Seeking Alpha. There's a lot that I need to go into in understanding this. But I think between those two, between TrendSpider, again, for $250, or Seeking Alpha at $189, I'd probably take the TrendSpider one. But at the normal price of TrendSpider, if you're not using charting, I think $189 is a solid play for Seeking Alpha. So I'll include those links down below. If you have any questions, hit me up. Again, everything's on Linktree. linktr.ee/daily stock pick. TrendSpider is right there for $250. Did I not? I didn't change it. I guess it's, it won't take me to that one. It'll take me here. It'll take you to the current offer. Join Webull today. Webull, get free stocks, daily newsletter. Visible if you're paying anything more than $30 a month for your phone service. I think it's back down to $20, $25. They play with this all the time. Get $20 off your, let's say, bring my phone. We're going to say, your phone is welcome. Get started. Wireless, $25 a month. Yeah, it's back down to $25 a month. I'm going to say iOS because who the freak, has God, if you have an Android, let's say Verizon's my current provider. It's as simple as this. Check your compatibility. Here are your two options. Continue with eSIM. There you go. Let's just look at the plans. You put in your eSIM of your phone. You get an eSIM. It's great. Here, $25 a month for the basic. That's it. If you want the extra, where you really don't have any difference between this and Verizon, it's $35 a freaking month. Yeah, and you get $20 off your first month with that link. So it's great. If you want a Tesla, sign up there. Savvy Trader, we talked about Savvy Trader. You can gift me with Venmo, PayPal, or Cash App down there. Everything else, you can see the socials. There's X. That's Twitter. If you want to follow me on Twitter, I am on Twitter. I'm a little bit active on Twitter. Not as much as a lot of people, but I am active. I retweet mostly a lot of the things that I see, like this guy talking to the announcers. That was great. Netflix is oversold. Like I said, Netflix is the greatest buy. Amazon posts worst weekly performance since October 22 after printing a hammer candle into the 52-week. ARKK down 15% since Cathie Wood claimed her fund was the new NASDAQ. Yeah. 10 quality stocks near their 52-week lows. I like this thread. So follow me on Twitter. We've got a private Facebook group as well. If you want to join it, you just go in there. You can see private Facebook group right here. It'll show up. Let's close this. Let's close this. Let's close this. Instagram. I'm on there every now and then. But any questions, hit me up. linktr.ee/daily-stock-pick. Thanks, you guys. Talk to you later. Bye. Let's see. Don't forget the $1.50 hot dog. That must have been when I was talking. CLF got an upgrade. Let's see. That's usually on FinViz, I think. Usually it's the day of when it's an upgrade. There it is. Today, Citigroup, $22. $22 price point on Cleveland Cliffs. $22. It's trading at $14.73. I got to buy more of that stock. Yeah. Oh, good. Brandon's back. No, I am not saying that Disney will never recover. I am saying wait for Disney. I think you can be absolutely patient for Disney. The reason I took GE in there is because nobody ever thought when I first started trading, GE was one of the first stocks I bought. I know you're a paid member of the newsletter. That was in my story. It was one of the first stocks that I bought. It is a mainstay. It was back then. GE was making aircraft engines. GE was in finance. GE owned NBC. GE had their hands in absolutely everything. Healthcare, everything. And they just extended themselves too much, which is similar to Disney. Disney has the parks. Disney now has streaming service. Disney has ESPN and the cable services. Disney has all of their movies. And let's be honest, the superhero movie genre, still probably the top one, but it's a little bit extended. So I'm not saying it won't recover. I'm just saying, in my mind, with Disney, I talk about it a lot with Apple, comparing Apple to GE. Apple continually reinvents themselves and they don't extend themselves. I had a good discussion with my friend. Elon's not a big fan of Tim Cook. And the reason Elon's not a big fan of Tim Cook is because when 2018, when I bought my car and Tesla was going bankrupt, Elon reached out to Tim Cook. Now imagine if Apple had put money in and just said, you know what, we're going to buy Tesla. Probably would have been a distraction. The stock price of Apple probably would have crashed. But instead of a $2 trillion company, Apple would now be a $3 trillion company at a basic price. They would have the car. The iPhone would now be integrated into Tesla. Now, would Tesla be what it is today? I don't know. I don't know if Elon would have backed out or if Tim Cook would have said, hey, our guys have it. We're going to take it from here. You don't know. But that's where I say, Tim Cook, people say, I say, well, the stock price might have been, triple what it is today if he had bought Tesla. But they could have lost their way as well. Integrating a big company, a new product category is tough. And Disney did that over the time. You can see it. They integrated cable into their stuff. They integrated ESPN. They integrated all the cable networks. This was their streaming pipeline. And now they've just lost it. So I'm not saying it's never going to recover. I'm just saying have patience for it to recover. I don't feel the need to get into Disney just because it's down right now. I got into Disney, I think at 119. I'm sorry, I traded it, I think at 103. It got up to 120. I absolutely should have sold that day because since then, hadn't been above 100. So, CEO of AMD, yeah. If we go over here to AMD and look at the insider stuff, I mean, she's been buying. No, she's been selling. Lisa Su sale, $36 million back in June. 122. I mean, she sold at 122. Genius move. She's not buying anymore, but she hasn't sold anymore. Lisa Su, $8 million. Yeah, 111. I mean, these are all, listen, genius trader. She sold at 105, September 12th. So maybe she's selling more and maybe it'll come out in a little bit. But I like it. Government shutdown. Christian, the offer for Seeking Alpha for TrendSpider, it's over September 30th, which is I think Friday. Thursday, Friday, Saturday. So it's Saturday. So if you get your thing, I listen, I don't think they're going below this 250. Honest to God, are you going to get it for 120? Hell no. 250 is the best deal. So if you're even thinking about it, upgrade. Get it. I did see that Elon and Alex were sitting next to each other. Okay. I am going to now head on out and do all this stuff. I've got to get my day started. Okay. Anybody have any questions? I think let's see. Indices check. Let's see where we're at. Because I think everything's down. I'm looking. Apple's down. Amazon's up. Cleveland Cliffs is up. Apple's going to drive my portfolio. Yeah, I'm down 0.02. But the indexes are down way more. So I'm outpacing the indexes. But, okay. I am out of here.